Good afternoon, friends and traders. Welcome to Market Recap. I am Dan Hodgman. It is Tuesday, March 16th. I hope you guys have all had a good day. There was some good opportunity out there. There were some tough trades out there. And the craziest thing is we are marking today new all-time highs. Yeah, there's a little bit of a retreat since, but we marked new all-time highs on the one-year anniversary, the biggest percentage drop these markets have ever seen. Just for perspective, this day last year, Dow dropped 12.9%, which was the second biggest percentage loss post World War II. In 87, we had the 22.6%. But obviously, if we're talking points, biggest across the board. S&P dropped 12% today last year, which was its third biggest percentage loss. And then the NASDAQ dropped 12.3%, which was the largest percentage loss it ever had. So pretty crazy to be coming just off all-time highs today when 12 months ago we were seeing circuit breakers being hit, which led to the new adjustments that we saw last year. I think we were all kind of in an absolute panic and concerned and fear of what's going to happen. And that downside move really accelerated. We blew through that 30% retracement and continued on down. And it's amazing how things can turn around in a year. Has the economy? Well, that's bigger. I think that's a bigger, different kind of discussion. But the stock markets are happy nonetheless. So we're seeing those things rise. But we're seeing a little bit of pullback here today. Kind of expected. We get the Fed coming out tomorrow. They're going to be doing some tiptoe. We're going to have to really pay close attention to the language that Jerome Powell is using. Remember, we go back to prior to all this happening last year, and the big conversation, we were paying attention extremely close to the terms he was using. Hawkish. Hawkish was one of the big ones. Patience, things of that nature. And so we have those things that we're going to be paying attention to, which is really the main reason behind what's going on here today. Bill, Charles, I'm really glad you enjoyed Coach's Playbook today. Very fun topic. Jack and I dive deeper into it on the podcast Limit Up. That'll come out on Thursday, so make sure you check it out. We kind of dive into that one, and it was a pretty fun conversation. Tanya, good to see you. And the real one was the market afraid of Biden's new tax plan rumors. Nope. I think today was pretty much standard day before a Fed statement, especially with the Fed being so integral into what can happen. Inflation. Remember, we go back 2 weeks ago, inflation was all we were talking about. We were starting to see sell-offs. We were concerned about inflation. We saw yields rising. You saw bonds dropping. There was a lot going on 2 weeks ago. We have this short memory within the markets as we're starting to mark highs again. But we got to remember, tomorrow's conversation, there's going to be a lot of talk about inflation. Let's pay attention to that one. Brian, good to see you. Yep, I think you're spot on with that response. Mike and Charles, yeah, check it out. I think you'll enjoy it. It was a fun conversation. I always enjoy diving into stuff like that with Jack, and it kind of led to some other topics that we're going to kind of dive into a little bit. Stimulus checks, they are out there. Looks like they're hitting bank accounts. I know I got mine this morning or yesterday. I don't know. I'm with Navy Federal. It's one of my banks that I use, and, well, they're always pretty quick and on the ball with that for active duty and veterans, which is pretty slick. Crude oil, quite the bounce off of weekly kickoff low, 63.80, a price that we've talked about a little bit here over the last couple weeks. Bounced off to the tick, bounced right off, and it rallied right up to 64.50, another level we have consistently brought up and found opportunity. That 64.50 really has been quite the magnet for that market to find some opportunity. S&P 500, we made the highs right after the open, and from there it was just a steady decline. I'm not looking at anything other than technical for what's coming tomorrow. We're thinking about what's going to happen. Small little sell-off, get flatter, try and patient out. We're not looking for the big directional move. NASDAQ, same thing. Broke right down to settlement price. Small bounce since we checked out settlement price, but really just starting to sell off a little bit. Nothing wrong with that. It's expected. When we make new highs, these markets tend to want to sell off them a little bit. Gold pretty much floated settlement price all day. Not a whole lot of conversation there. Euro, after the sell-off we saw last night, it got accelerated after equity open, and then fell into a little bit of range, rallied right back up to yesterday's regular trading hours low side, regular trading hour low, and just stalled. 10-year note, good opportunities to and away from settlement price. Again, not a huge range. We're not looking at anything crazy there, but pretty much some really good technical opportunities based off of settlement price. Remember, that's one of the things John and I talk about regularly. We're always looking for that move to settlement price. If the market starts going, looking for opportunity, and it was a pretty attractive opportunity there today. Again, if you didn't check out Coach's Playbook, we sat down, we discussed it, getting on tilt. We've all been there. We've all experienced it. I don't care who you are. I don't care how, unless today is day one and you made $1, you didn't really have to. You haven't been in that situation. But you've been around this long enough. You felt that. You've been in that situation where you have started to deviate from what you're supposed to do. You have started to make trades that weren't probably very smart, leveraged in as the market's going against you. Hey, if I buy another one, I'm just averaging in a lower price, right? That's a mentality a lot of people have. And that leads to a lot of times that idea of going on tilt. And so we want to find ways to avoid that. And everyone likes to say it's discipline. I'm going to sit here and say it's not necessarily discipline. Rather, it's the accountability to the rules that you have. And that's what discipline is. It's a lot more than just, well, I had discipline. It's easy to say I have discipline if we are allowed to change our rules in the middle of the day. That happens a lot where I'll talk to someone, I'll say, normally I'm only risking 500, but I think I need more room for my strategy. And they make that decision in the middle of the day. To me, that's a sign of, hey, you're starting to show that you're going on tilt. You're deviating from this plan. You're trying to adjust your strategy and your plan and your rules in the middle of trading. That's going to lead to some detrimental trading. 99% of the time when I talk to someone and they still decide to trade, they tend to lose a little bit more. So just a couple things that we touched on. It was a fun conversation, and I think there's a lot to it, and so maybe we'll have to continue to dive in. So take a look. Let us know your thoughts. And other than that, let's go ahead and take a look at these charts and see what we got going on here today. As always, we're starting out with crude oil. So like I said, weekly kickoff low, 63.80. Great opportunity. Off the open, initial move to 63.80. Started to bounce, and here's what I like. It continued to excuse me. This post-COVID cough has not left me. So he bounced right off of 63.80, not once, but twice. And that was a good opportunity. Actually, over in that Discord channel, we were talking about this. We said if 63.80 holds, we're going to look to see it return to 64.50. Hey, how about that? Rallies right up to 64.50. If it broke down, we were looking at some other levels down below, down into the 62s. But really, we were looking at this idea of saying, look, 64.50 has been an extreme magnet for this market. Market has been really reactive around it. Notice in the overnight session right before the open during the London session, it just floated up and down from 64.50. We broke off of it in the open. Quick check at weekly kickoff low. And we bounced right back and actually continued to almost extend yesterday's value area. Did not get all the way to the high side, but really good opportunity nonetheless. To me, this was our opportunity right here on the dip. We showed very weak sellers coming in. That's a signal to us that says, hey, opportunity to see this thing retrace. Next, let's go ahead and look at the S&P 500. And like I said, opened up, we made new highs. There was no excitement up there. Day before FOMC statement, a day before we're going to start talking inflation again. Is that going to lead to increase in yields? What's going to happen? That's going to be the big question, and people that are thinking that as well. We're going to see that little sell-off. This market's going to work nicely right down to settlement price and just continue lower to yesterday's value area high. Did not accept within value area yesterday, which is something I like to see. That to me says, hey, standard sell-off right off the highs. Let's get out a little bit, wait and see what tomorrow brings. Now, if we start to accept back into this range tonight, that's going to tell me otherwise. But right now, we're showing that we're holding up above it. We're not accepting into yesterday's range. And we may see potential directional upside move again. But again, that's something we're going to pay attention to. Keep an eye on where this market continues to accept overnight. I think you're going to see volume start to slip off here tonight and into tomorrow. There's going to be a lot of patience. And I want everyone else to be extremely patient if you're trading in these equity markets or these treasury markets tomorrow. Be patient, waiting to see what Powell has to say at 1 p.m. Central Time. All right, next, let's go ahead and look over at the NASDAQ. A little bit stronger than the S&P here today. Opened up, the rally continued. We maintained that directional trend, which we've been seeing for 1, 2.5 solid days. Market rallied up, made that high up to 13,287. You know, just a couple months ago, we were in the 9,000s on this. This market just continues to break through the ceiling. Market made that high and simple technical sell-off. We missed maybe the first part, but here's an opportunity. We know going into today, it's the day before FOMC. This is a pretty standard technical sell-off, which has been happening quite regularly for the last couple years. There's nothing wrong with this. Again, Jerome Powell, what he has to say, he's going to walk a very fine line with the terminology he is using tomorrow because it's going to have a major effect on these markets. Market broke down almost right to settlement price. Didn't quite get there, but since lunchtime, we've seen a little bit of a pop back towards that overnight consolidation area. So we're going to look at here, basically right where we're trading, 13,100 as fairly consistently fair value for this market right now. That's what the market's telling us. Next, we'll go ahead and look at the gold, which we had a really, I apologize for this cough. All right, let's try this again. So we opened up, market was extremely choppy, extremely volatile. And throughout the day, other than the open, that spike off the open or a little bit after the open during the equity open, other than that spike, this was a pretty choppy market. Pretty much floated around settlement price. So I think good opportunities in this market were actually on the low side as the market came to yesterday's value area low to be looking for opportunities down here to possibly see it come a little bit higher, maybe towards today's point of control, which was pretty consistent right here at 1731. Fairly consistent price for this point of control throughout the entire session. And so that's what I was looking for. Just seeing if this market will bounce off of that and really try and define that relatively tight range. All right, next let's go ahead and look at the euro. And like I said, euro opened up pretty much constant strong sell-off throughout the entire session until after lunch where we saw a little bit of a pop and we just saw some profit taking. People got that short side. Again, we're talking yields tomorrow. A lot of these markets, people are just being patient. They're trying to maybe flatten, maybe do some hedging, try and calm down their position so that tomorrow doesn't lead to too much extreme volatility in their own situations and in their own strategies and P&L. So that's simply what we saw here. We got a little profit taking as short time frame sellers were taking some of those profits and getting out of those trades. And then lastly, let's go ahead and look at the 10-year note. So like I said, 10-year note opened up, first move right to settlement price, but it was a very weak move. It did not last long. It didn't make all the way there. So we checked overnight highs. We checked those overnight highs. We got rejected, and that's when the move right down to settlement price took place. Really good opportunity here, and we floated settles for a little while until this last half hour or so as we've started to break down. All right, everybody, those are our markets here today, and I do apologize for not being here yesterday. It turned into a little bit more of a busy day for myself. So thanks to Hogue for hopping in. Level 2, good to see you. I hope you guys are all having a great day, and the week is off to a strong start. I can't stress enough, though. Tomorrow is FOMC. Be patient. Sit on your hands a little bit. Don't feel like you have to rush into things. It's going to be unpredictable. Like I said, it's really going to come down to the language he uses, the terminology that he's going to be saying. You know, we're going to keep rates steady, but we're going to be XYZ on our outlook. That's something we want to pay attention to. We want to pay attention to the terminology he's using around inflation. He's probably going to say, we're looking to keep it around 2%. Things are looking okay. With the reopening of the economy, we may see a spike, but here's how we're going to handle that. And those are where we want to be paying attention to. Those are the things that we want to keep an eye on here tomorrow after he speaks or while he's speaking. So be patient. We may see some bigger moves. It doesn't mean it's always a good move tomorrow morning. prior to him speaking, right? That's something we want to think about. So just a couple things to take note there. Otherwise, tomorrow, housing starts and permits 7:30 a.m. Central Time. EIA petroleum status report 9:30 a.m. Central Time, and then like we said, 1 p.m. FOMC. I know I'll be sitting on my hands for the most part until that takes place. And don't forget, Friday, quadruple witching. We're seeing all the expirations coming in on Friday, so some people have a little voodoo when it comes around to quadruple witching and trying not to trade there. So if that's you, keep that one in mind. All right. Rates pretty much unchanged here. 10-year is holding up above 1.6. We're at 1.621, so a little bit of a spike of 0.014. 30-year still above 2 nicely, 2.381 with a small little pop of 0.013. Tesla, the stock we've been keeping an eye on for, about a year and a half now. Broke off of 710 today, down to 676. The VIX, getting a little bit quieter. We dipped below 20 here today, into the 19s, but right now ending the day back up above 20. And GameStop, gosh, this has just been a fun one to watch. It has me super intrigued. $208 a share there. And then next, Airbnb, our stock is looking pretty over there. We are trading at $200. Remember, we bought that one at, double check, 148.30. And then lastly, Bitcoin. We saw the move yesterday up above 61,000. That's all kind of been brought back a little bit. We're trading 56,370, so we still got some good profits in that one. If only sometimes it was real, right? All right. All right. Tanya's loving the quadruple witching. Level 2, yeah, Tesla's just not the big mover like we saw for the last year. It's finally starting to slow down there. Other than that, no major things to be looking ahead at tomorrow. We touched on all that. So a couple things on this date in history. Well, first off, we had the 1-year anniversary of the big break last year. And then on this date in 1802, the first ever United States Military Academy, West Point, was established. One of my best friends was a graduate there, played football for him, and I was his first salute when he graduated. And then this one, pretty relatable to what we talk about every day. In 2008, Bear Stearns officially collapsed and sold to JP Morgan Chase. And then the last one I've got for us, because I like to touch on things with United States Marine Corps, being a Marine myself, 1945. Fighting ended on Iwo Jima. So that's what I got for us here today. Hope you guys have all had a great day. Hogue will be back tomorrow morning, 8 a.m. Central Time with the market forecast. Until then, stay safe, wash your hands, trade smart, and trade well. I look forward to seeing you guys in the markets. Take care, everybody.